It is my pleasure to present this tutorial on credit card management. My name is Phil Semlow, and I am a supporter of Bravo Programs of America. I'd like to share my screen with you. I do have a presentation to go through as we talk about credit card management. There we go. So credit card management. So you're at this point where you're considering or contemplating opening a credit card, or maybe you've already opened a credit card, but you haven't fully understood some of the ramifications of having a card, the impact that it can have on you. So in this, we're going to look at a few things. We'll look at what is a credit card, so you have clarity with understanding exactly what a credit card is, why you should get one or consider getting one, the different types of credit cards, risk and rewards of having credit cards. I'll have an example that helps you to understand the impact of having a credit card and only paying the minimum payments. And then I'll give you some statistics as a national average, and then also for Gen Z, which impacts you guys directly. So what is a credit card? A credit card is an agreement with a bank, a retailer, or any other financial institution that allows you to make purchases on credit with a promise from you to pay it back at a later date. So every credit card offers different terms based on the agreement. So when you're considering a credit card, it's important to look at what the terms of the credit card are. It's pretty often that they have incentives for you to open their credit card. That can be exciting, but you have to take the time to read and understand what you're agreeing to, because you want to know what are the terms of you utilizing the credit that they're extending to you. Now, a credit card is different from a debit card. They're used pretty similarly, but a debit card is money that you already have on file with a bank. So you're only allowed to use what you have available in your account. When you make a transaction, a digital transaction with a debit card, that money is taken out of your account immediately, where a credit card oftentimes gives you 30 days in a billing cycle. So you get to buy it on credit with a credit card, and your promise to pay is in the following billing cycle. So there's benefits to it, and there's also some risks associated with it. Why should you get one? When you use a credit card correctly, it can help you to establish and or improve your credit rating, which is often the key indicator when applying for financing, whether that be an auto loan, a home loan, even possibly renting an apartment. Oftentimes, creditors will look at, or merchants will look at your credit rating to determine if you're credit worthy, if you're worthy for them to take a risk on giving you credit. And so getting a credit card can help you to establish that score, because the higher that score, the greater the terms are you're going to be offered. A credit card is often or also a way to provide additional benefits when paying your normal expenses. If you get a credit card and you use it for your normal, regular expenses like fuel in your vehicle or food or rent, and you pay it at the end of each month, that also helps you to not only improve your credit score, but there's certain credit cards that offer benefits and incentives, which we'll talk later about, that just by paying your regular bills, you get rewarded for it. And then ultimately, what a credit card can do is create an opportunity in the case or situation of an emergency. So if you find yourself in a situation where you don't have the funds to do something, but it's required of you to do it, like an auto repair, a credit card is a great tool to have in your pocket in order to help get that service done or get that product that is needed done while you wait to get your next paycheck to cover that cost. Different types of credit cards. The first kind is secured. This is primarily for people who have no credit or who have poor credit that need to establish it. The way a secured credit card works is you give the financial institution a certain amount of money, $200, $500. You put it on file with them. They give you a credit card with a limit of that equal amount. So you're able to spend up to what you have given them. So they have zero risk associated with this. The nice part about it is it helps you to get some credit established, but it also protects you from overspending. So if you have not gotten a credit card, if you have no credit rating, a secured credit card is probably your best option to get started in. As you establish a good credit history with paying your bills and you get a credit score that's high enough, you'll be able to get better rated cards. An unsecured card is a typical credit card. You don't have to put up any collateral in order to get an extension of credit. When it comes to unsecured credit cards, there are a variety. There are so many banks and retailers that offer unsecured cards, and it really is just a decision is based on your credit worthiness. Can they determine, or are they able to determine, if they give you the ability to have a credit card, how likely is it that you'll repay them? And so the more you establish yourself with credit, and a credit card is a great way to do that, the more likely it is you'll get more favorable terms when you apply for other credit cards. A student credit card usually comes with lower limits because they know you're just getting into understanding how to buy and pay those bills, buy things and pay those bills off. So they usually come with lower limits, but they oftentimes offer some educational resources, maybe discounted books or things of that nature that would help you in school. That's a great product when you're just starting off as well, because they're more willing to take risk on you as a new borrower. Rewards credit cards. These are credit cards that have incentives, whether it's cash back, travel incentives, or even points. As you spend money, you have the ability to earn rewards that then convert into incentives for you to utilize. This is a great product when you're very responsible with credit card management, because just your everyday bills will provide you benefits. So you buying the same gas for your car every month on a credit card, now you get an incentive that you can utilize in different forms based on a rewards card. These cards usually require you to have an established credit score, so you won't get it as your first credit card likely, but it's something to work towards. Now, you need to be careful with these, because the enticement is, if you spend more money, you get more rewards. The goal is not to spend more than you have the ability to repay. Credit card management is not a tool to overuse. It's a tool to use responsibly. And so they know, creditors, lenders, financial institutions know that the chances of you overspending and carrying a balance is far greater than you believe. That's where they make all their money. They're not giving you rewards because they like you so much. They're doing it because it's very financially beneficial to them as an institution. You're likely to carry a balance, and the interest you would pay on that credit far outweighs the rewards you get. So you have to be very responsible with all credit cards, but especially when you're getting an incentive-based credit card. And then retail or merchant-specific cards, they are very specific to that store. If there's a department store you shop at regularly, or someplace you frequently go to purchase products or experiences, they may have a credit card specifically for them as an organization. Unless they have great benefits for that card, I always encourage you to stay away from those, because we really want to limit how many credit cards you have. A good rule of thumb is to never have more than 3 credit cards in your possession at any given time. And so a retail card is only going to be good for that merchant. So if you find yourself on the side of the road with a flat tire, your favorite department store is not, their credit card is not going to help you get a tow or a repair. So if you're going to get into the credit card market, I would highly encourage you to look for a regular bank, a Visa or MasterCard style credit card that is accepted everywhere. Some of the risk and rewards. Some of the risk is, it is easy to get into debt by spending when you don't have the money. And so what happens is there is no emotional response when you buy something on a credit card. However, and you read about this, where if you have $20 cash in your pocket and you want to make a purchase and something is going to cost you $20, there's an emotional response where you're less likely to spend that because you'll know that there's no money in your pocket. That emotional response is not there with credit card. There's no emotion to a credit card purchase. There's always the assumption of, I can afford this today and I'll pay for it later. Unfortunately, for most people, something happens or they're not prepared to pay for it when that bill comes due. So it's very easy to find yourself getting into debt with credit card, which in a later slide will show some of that to you. The other risk is compounding interest, penalties, and fees that make a small purchase very expensive. And so what does that mean? When you make purchases on a credit card and you're unable to pay that credit card off at the end of the month, not only do you owe that balance and the interest, but every day as the interest is accumulating, you have to pay interest on that interest so that expense, that small purchase becomes very expensive. So when you're looking at getting a credit card and utilizing a credit card, you're going to want to make purchases that you know you can afford to pay off. It's not free money. You will be held responsible for it. So as you enter into the credit card market, know that it's a tool, but it's also can you be used against you. Another risk is fraud can happen easier. As you're out there making electronic transactions, it's easy for that credit card those numbers to be stolen, used for purchases. You're seeing more and more financial institutions put in safeguards against that, but there is a risk of that, which may require you to do some work, invest some more of your time in order to prove that those weren't your purchases. And another risk is that your credit history can be severely damaged with misuse. Credit is hard to get and easy to lose. There is a great tutorial on FICO scores that's been done with Bravo that I would encourage you to watch, because you need to know that those decisions to make a purchase on credit, if you're not able to pay those off, can have long-term impact on your credit, which will also have a long-term impact on the way you're able to borrow money, if you're able to borrow money, but how you would borrow money. Some of the rewards, it can help you to establish or improve your credit history. It allows you to get the best terms when borrowing. So having a good mix of expenses that are reported to the credit agencies helps you to get a qualified credit rating, so that when banks and financial institutions look at your credit worthiness, they see that you are responsible with your credit and they can take a risk on you. And then with certain cards, there's always those incentives. You'll have to work towards those, but your everyday purchases can ultimately work a little harder for you and provide incentives that you wouldn't have had before. This next screen is an example of, and this is taken from a credit card statement, of what it looks like when you pay the minimum payment on a credit card. And so you'll see in that a balance of $3,630.68. If you pay the minimum payment of $100.02, that's going to take you 12 years to pay that balance off. It's very likely that the things you bought to rack up that debt, you won't even have them any longer, and you'll still be paying on them. And that's a reality. But you can see, just by adding a little bit more money, if you're unable to pay that off at the end of the month, I strongly want to encourage you to be aggressive by paying more. That minimum payment is not because the financial institution thinks you're such a great person and they want to make it easy. It's because it accumulates more interest and more profit for them. So it's for them, not really for you. So as you go out and make purchases on your credit card, and if you're unable to pay it off, look for ways to be aggressive with paying that off. Pay anything additionally you can every month till you get that debt gone. You can see in this example that cost, if you pay the minimum, is almost twice as much as the original debt. So just by paying a little bit extra, they can get that from 12 years down to 3 years. So I certainly want to encourage you with that. Another good reason for you to be budgeting is so that you know what you have to spend. So before you start spending on a credit card, you know what your limitations are when it comes to repaying. And then just some basic statistics on United States. And this is just the US with credit card stats. We currently are at $1.18 trillion in credit card debt. So Americans love credit cards, and we carry a lot of credit card debt. The average household is carrying $6,434 in credit card debt. So you can see from that last slide of what impact that's having not only on the homes, but also for the financial institutions. So they're very willing to extend credit because it's very beneficial to them. The average credit rate is 21.91%. That's a high interest rate. That's money that you're giving away because you weren't able to pay that expense off right away. So as you get into credit cards and being responsible with credit card management, you want to make sure that you're not buying things that you cannot afford. And the average credit debt for Gen Z is 3456. So if you remember that last slide of 3600, this is a very real scenario for people in your age bracket, that the normal Gen Z is carrying 2 credit cards and carrying $3,400 in credit card debt. And so you want to make sure that you're not normal. You want to be using credit and leveraging it as a tool to help you get things and do things with the best terms. You don't want to be one that's carrying this debt. So if you find yourself already with some credit card debt, look at using a budget to create an opportunity to pay down that debt so that you can get out from those high interest rates, those penalties, and those fees. And so last thing, my closing thoughts, if you decide that you are ready for a credit card, consider these following things. Try never to owe more than 30% on your limit. This is the way that helps you get the best credit rating from taking out a credit card and utilizing it. And it also provides plenty of room for an emergency if you should find yourself needing to lead on credit during an emergency. If you have a balance, try to pay it off in full every month. If you must make payments, look for ways to accelerate it as fast as possible so you're not carrying that debt. Avoid using your credit card for impulse purchases unless you can afford to pay the balance when the bill comes. You don't want to get in a situation where it's something you just want and you haven't considered the cost. A credit card is a dangerous weapon at that time, and that's where you'll find yourself bringing debt that you didn't really want. And try avoid using credit at merchants that charge a service fee. You're seeing this more and more as credit card companies are passing the expense on to merchants, retailers. You're seeing it more and more where stores and merchants are now charging a service fee for you to pay with a credit card. Nobody wants to go out for a $10 lunch and pay $13 because they used their credit card. In those situations, it is better for you to use cash and avoid those wasted costs. So be mindful of when you're utilizing a credit card of extra fees associated with using it. So as you step into the credit card market, do so with this extra knowledge and with a little bit of confidence, knowing that you can do this without taking on a lot of risk or responsibility that's going to hurt you in the long run. Okay, that's it for me. Take care.